Welcome back to Commodity Champions, where we were discussing on how you should be trading or putting positions in case of crude and metals in 2018. Let's talk about gold now, which of course started this year on a very positive note, but in the second half really seemed to have lost the pace, and we have seen very sharp declines actually come in for last 1 month. The gold and silver prices, both of them are trading at multi-month lows, but what perhaps could really work in favor of the Indian markets is a statement, of course, coming in from sources today, that the Indian government is looking to cut import duty to half, to nearly 4 to 6%, and could actually increase GST to 9%. The government also perhaps has been saying that they do not want the tax incidents actually to get lost in that. To speak more about that, on what can be expected in the gold demand in Indian markets and what would the tax moves make or have an impact on, we are joined by Sanjeev Agarwal of Gitanjali. Sanjeev, hi. Thank you so much for joining us. What is your sense really on the tax changes? Because we saw a lot of that movement in the previous year, and that did impact the Indian buying. With the number change coming in by the budget, if it does come, what kind of impact can we expect?
Well, first of all, from a consumer point of view, the fact is that GST and customs duty is not interchangeable. Very clearly, an Indian consumer looks at the gold price, which is the landed gold price, whatever may be the customs duty, and on that she expects a reasonable markup in the form of a tax or GST, and that's it. Whereas if the government's view, which I think is a bit premature to suggest because it's still rumors, but whatever it may be, if the government's view is that GST and customs duty is interchangeable, and if the view is to protect the income, the government could reduce the customs duty and enhance the GST, that's a very flawed argument because, like I said, GST is what the consumer looks at the point of purchase, and if this alternative is done, then it has going to be a very serious impact on the whole perception of the government. And why I'm saying that is given the fact that more than 55% of purchase of gold as part of the household savings is in the lower income category, and these are the people who will get most affected if the GST goes up. So very clearly they are not interchangeable, they have to be kept separate, and that's the way it should be.
Sanjeev, there has been a lot of back and forth when we look at the Indian bullion or the jewelry sector for that matter. We are still awaiting the hallmarking regulations. 1st of Jan is what we understand it will be rolled on. We've seen PMLA, we've seen PAN card. There has been various stuff that has happened to this sector. As we stand now, what is your stance? How are you getting into 2018 with the sector?
Cautiously optimistic.
Okay.
Why optimistic is because over the last 2-3 years, the government is willing to listen to the viewpoint in 90% of the case before reacting. So that is the optimistic part of it. Cautious because there's so many interplays and so many organized arms of the government which is involved in the gold policy that they work contrary to each other very often than not. And there's lack of understanding of the sector in spite of all the interactions that have taken place between the trade and the government bodies. So because of that, I'm very optimistic, but a little bit of cautious if there is some steps taken by the government which does not augur well.
Sanjeev also talked to us about the kind of physical buying that we are seeing in the Indian markets right now, because this quarter in India is the one when the sales are at the highest. Are you encouraged? Are you disappointed with the kind of numbers that are flowing in? How do you see it?
Over the last few weeks, the feedback is that with the drop in gold prices, the traction and the purchase process has gone up. There has been issues vis-a-vis, like you said, PAN card, PMLA, which has postponed purchases. But given the overall environment, I'm quite positive about purchases of gold. It might be postponed, but it's not gone. It's going to be there somewhere as far as jewelry consumption is concerned. So it's going to be there. It's there. Whenever there's correction in prices, the demand goes up, and we see that going forward. The other important factor is that, as per research analysts, the price of gold is going to remain strong going forward into 2018, and this also supports purchase whenever there's a correction.
Well, clearly, yes, weaker prices has been a supportive factor here, and that really brings me to you, Jonathan. Thank you so much for staying by. What is your sense? Because we're just about holding 1250 or below that actually for this week. What price ranges are you expecting for gold as we move into 2018?
Look, I think when you look at it, 1250, as we know, we're bumping around here. I would like to see 1310 broken on the top side. If I see 1310 broken on the top side, then I can be more confident that we're going to have a bit more of a run to the top side. So if anything there, when I look at the copper-silver ratio, at the moment I'm starting to favour more on the copper side because it's just been such a lacklustre performing metal.
Which really has been the case, yes, for people who are buying it as an investment. But David, coming to you as well, what is your sense really about the silver prices? Because while, of course, there have been various reports suggesting on how it is near bottom, it is in deficit, and there is a strong demand coming in perhaps from the industrial markets, EV, etc. How are you looking at silver then going forward, and especially vis-a-vis gold prices?
Look, certainly if you have a look at the silver price, there is a good potential that we may see it, the momentum in the price actually move a little better than the gold price through 2018. And that would be on the very fact that we've been talking about the industrial component of world growth, perhaps looking a little more robust through 2018. Silver's got a much bigger industrial component usage to it than gold has, and that would see, if we see that component start to becoming a little more stronger in terms of the industrial production around the globe, then that would certainly accelerate the silver price at a quicker rate than we would see the gold price accelerate. In terms of a range, at this point we haven't set our 2018 range, but I would suggest to you that when we do, it will be at slightly higher prices than where we are, not slightly higher prices, it would certainly be at higher prices than where we're seeing silver trading at this point in time.
David, as Sanjeev was also pointing out that the lower prices actually have been favourable for Indian physical buying, but how do you look at those prices as well? Would you say that we are near support, near bottom when it goes for this one?
If you have a look at the gold price, and we've talked about this again before, the key driver has been the US dollar. We've seen that trading higher over the course of the last few trading weeks, and that's pushed the gold price lower. Also, a lot of the geopolitical events that pushed the risk premium back into gold have now been somewhat in the market for some time, and that risk premium is starting to erode. So that's also putting pressure to the downside. We continue to believe that in 2018, the base on which the gold prices will rally will be higher inflation. That inflation hasn't raised its head in 2017 as we thought it would, so we do think that that base has been, however, supportive of 2017, and that gives the 2018 inflation rally probably better legs. If that's the case, then we would expect to see gold. We thought it would close at $1,400 at the end of this year. That target's not likely to be reached, but certainly $1,400 wouldn't be out of the question in 2018.
All right, so no such great guns, but strength is what we can expect in the next year as well. So gold and silver prices, while may not be closing very positive this year, next year there is a hope that we might see some gains. Thank you so much, gentlemen, David, Jonathan and Sanjeev, for joining us on today's series of Commodity Champions. But with that, it's a wrap on the show. Thank you so much for watching.